Okay, let's take that discussion forward then with two special guests who are joining in live here on the show. We've got Mehrab Irani from Tata Investment Corporation. He's right here in our studios. And from London, Simon Smith of FX Pro is here. Gentlemen, both of you, thanks so much for taking time out for us. Mehrab, let me begin by asking you, and as we sort of wind up 2015, I suppose it's time to look ahead. And so my first question really is going to be about whether you think in 2016 equity markets are going to do a lot better than what we've seen in 2015.
Yeah, good evening, Tanya. First of all, I would like to wish you and everybody at ET Now and all your viewers and investors a very Merry Christmas and a very happy, prosperous 2016 coming forward.
Thank you.
If you see the year 2015, the Sensex or the Nifty has given around 5% negative return, while most of the global markets, if you see the US market, that has been quite stable. If you see on the earnings front, every quarter after quarter there have been downgrade in the earnings in many of the stocks, many of the sectors by the analysts. The expectations were very high every time before a quarterly result, and then most of the time there were downgrades if you see. Today if we see on the valuation front, we are trading at almost 17 times forward earnings, which is slightly premium to the long-term average. Even if you see on a price to book value around 2.7 times or an earnings yield to bond yield, we are around 0.8 times. That means we are not cheap even compared to bonds. So that means that either the earnings have to go up or the interest rates have to come down. Also, if you see over the past few quarters, today the corporate profitability is around rupees 4 trillion, which has actually not really moved up, though nominal GDP has actually gone up. The corporate profitability to GDP, which was around 6% few quarters back, has actually come down to 4.5%. So it means that the earnings actually have to really pick up from here. And the main problem which is happening is that a lot of the commodity sectors have, because of the fall in the commodity prices, a lot of the commodity sectors have been not doing good. Also the capex has not been picking up, infrastructure growth has not been happening, so all that side has been suffering, plus the rural growth has also been suffering because of some of the consumer names are also suffering. So I think once all that thing improves and it plays out and we see actual impact in the growth in the top line as well as the bottom line of companies, it would be difficult to make a case for an expansion in the valuation multiple from this current position where we are.
Right. Mehrab, we were just discussing before the show started, and you seem to have, having a slightly cautious stance on the market, even at the fund level. Tell us the reasons why you are cautious on the market going into the new year, or perhaps do not share the same enthusiasm as some of the brokerage reports are, being circulated right now just at the close of the year.
Yeah, Ajay, as I mentioned, some of the tailwinds have actually to improve. If you see, as I mentioned, commodity prices, those have been falling globally. Yes, it is good for India in the long term. However, today if we see, it is affecting the earnings of a lot of companies. Oil prices actually come down by more than 50% in this financial year. Even if you say, take the example of coal, international coal prices have fallen by around more than 15%. Even natural gas has fallen by around 30%. So all that things are maybe bullish for India in the long term, but in the short term it is not helping the earnings of a lot of these commodity companies. Also, if you see, the rural growth has been really very bad, and because of that, a lot of consumer names have also been suffering. The top line of a lot of consumer companies have actually either the growth has come down, or in certain cases even they have started showing degrowth in certain segments, which is little worrying. The profitability today, if you see, the gross margin are almost at a 4-year high, and because of that the earnings are slightly maintained, and that is only because of the fall in commodity prices for these consumer companies. And also if you see in the banking sector, I think there is the NPAs etc. continue to worry them. Today if you see, there is the credit growth is around less than 9%, which is at a multi-year low. The corporate credit growth, when we talk with certain large banks, also is not happening. It's just 3 to 4% corporate credit growth, and even for next few quarters they have no visibility on the corporate credit growth, and everybody now wants to go to retail, which is growing at around 17 to 18%. So that may put further compression in the margins on the retail banking side. So there are certain all of these factors which have to improve so that we can make a case for revaluation of the Indian stock markets.
Mehrab, if you were to look at how 2015 has been, it's clearly the small and mid-cap companies that have outshined and outpaced the large caps. Is that a phenomena you think will continue as we go into 2016?
Yes, Tanya, I think that would continue. It would continue to remain a stock pickers market. And if you see, India has always been a stock pickers market with so many different stocks in variety of sectors being listed. So I think it would continue to be that way in 2016 also. I think we have to identify good companies with good managements where there are stable businesses and with decent valuations where we can invest for the long term. I think that theme should continue going forward in 2016 as well.
Merab, I wanted to understand your thoughts when you go around in your own community between the fund managers, both local and domestic. What are the thoughts you're getting on fresh allocations from the foreign fund guys? Because, Bloomberg conducted a poll between 12 global asset allocators, adding up to $2 trillion, and they seem to be extremely wary of valuations in emerging markets and are not looking at, incremental allocation in 2016. Do you think flows would remain challenging even in 2016?
Global flows should slightly remain challenging in 2016. However, I still think that India is comparatively in a sweet spot with clearly the Chinese economy slowing down and everybody knows what the problem is going on over there. I think India should get some kind of disproportionate share of global capital flows next year. Also this year, something very important is that, the local flows have also become very important. Today, if you see in the 2015, almost I think 72,000 crores have just been net equity inflows in local mutual funds. So I think those have also become a decent size now, which would counter any kind of global outflows. So I think, yes, overall India should be slightly better positioned to get global flows compared to certain other emerging markets.
Right. Merab, while you were making a case about how valuations perhaps look a little stretched in certain areas, where do you believe, there is some value investing and money to be made as we head into the new year? What are the pockets that would interest you, keeping in mind that, valuations are reasonable?
Positive on private banks. I think they have done pretty well in this cycle. They have managed their net interest margins pretty well. They have been able to grow their book, particularly the retail banks. I would be very positive over there. I think a lot of the retail banks have going at 20% plus book with comparatively better margins and better asset quality, which they have been able to maintain. Yes, the valuation may be slightly stressed in certain cases, but I think the growth is clearly visible over there. So I would be positive on private banks. I would also continue to stay positive on the auto sector. I think they have done reasonably well. The passenger vehicle growth has been very good. There has been expansion in the margins also because the raw material commodities have fallen for them, and they have been even able to take certain price increases also. So there also I will continue to be positive, whether it is the passenger vehicles which are doing very good, also the two-wheelers which are doing good. So I would be positive there. Also on the software sector, I would continue to say positive. The rupee is also depreciating slightly, and overall I think the demand continues to remain reasonably good in the current environment, and the valuations are decent over there for certain companies. So I would remain positive on these sectors.
Okay, Merab, what are your thoughts on the global worries? We've just come out of a bout of, almost elevated risk aversion around the US Fed related hike and etc. And then was a big relief rally. But do you think these concerns can resurface? What's the pace of China growth or something else, perhaps the pace of rate hikes in US? Is there room for correction in the emerging market, including India, solely because of global worries resurfacing going into 2016?
Yes, Ajay, global worries can always resurface. If you see even the US markets, the last year the S&P 500 gave hardly no returns, almost it is stable. But if you see the valuations over there are almost 26.5 times forward earnings, which is 10 percentage point higher than the long-term 15-year average. If there you see the earnings have actually degrown by 3.2% in the current calendar year. Also, if you see China, the slowing down which is happening and the effect which will have on global cyclical commodities, I don't think that this is just a very short-term phenomenon. I think we have to wait and watch that how that plays out, because China is a really large player in and consumer in a lot of the global commodities, and that is why we are just now witnessing such kind of fall in those prices. So I think we have to see those factors and we have to take a call which is very dynamic in nature.
Merab, closing comments really, and one of the big disappointments this year has been how somewhere the Modi premium seems to be waning. For one, you had the winter session, which was an absolute washout. A lot of hope was pinned on the GST, and there's a likelihood we're not going to see much, at least going into the next 6-7 months either. Do you believe that it's going to be these local factors perhaps that are going to pull us down as we head into the new year?
If you see, this whole bull market started around 18 months back when the Modi government came into power, and there has been a lot of hopes from investors from there. However, if you see currently the signals and the talks which are happening are very, very positive. But ground level, if you see, no much things are actually happening. You know, when we meet small companies and managements, so they are not very happy with what the ground level situation is, what the demand situation is, what the interest rate situation is, etc. So they have concerns, and which are very valid also. So I think unless, you know, the government starts moving ahead and starts taking some action, the markets might be slightly disappointed going forward.
Right. All right, Mehrab, Simon, gentlemen, both of you, thank you so much joining us on the show today.
Thank you.